Hello, in this video we'll explain the concept of Forex and CFD trading. With the help of the internet, trading has been significantly simplified, and many people can now easily begin trading the financial markets without even leaving their home. So what is Forex? Simply put, the foreign exchange market is where global currencies are traded. This market is open 24 hours a day, 5 days a week, closing its doors only at weekends. It's a big deal, seeing over $5 trillion worth of transactions every single day. To truly understand how Forex trading works, we need to explain what currency exchange rates are. The value of one currency, or its price, is always expressed in terms of another currency. This is called a currency exchange rate. So when we say that the Euro-US dollar pair is worth 1.2329, it means that the base currency of that pair, 1 euro, can be purchased for $1.2329, which is also called the quote currency of the pair. So the basic principle of Forex trading is to buy and sell different currencies against one another, with the aim of making a profit on fluctuations in the exchange rate, caused, among other things, by the laws of supply and demand. What is CFD trading? CFDs, or contracts for difference, are universally recognizable financial instruments that provide traders with the ability to trade price movements, without needing to buy or sell the physical commodity, index, or share. The actual underlying asset is never owned. Instead, CFD prices mirror those of the underlying asset. CFDs have always been a popular form of trading, as they offer a great deal of versatility, allowing traders to speculate on the rising or falling prices of a vast array of different instruments.